During his first term in office, President Donald Trump implemented a series of tariffs aimed at addressing trade imbalances and safeguarding American industries, particularly targeting China. These measures involved imposing tariffs on a broad spectrum of Chinese imports, escalating into a trade dispute between the two nations. The administration justified these tariffs as a means of exerting pressure on China to reform its trade practices, particularly in relation to intellectual property rights and forced technology transfers. Now, in his current term, President Trump has proposed a new 10% tariff on Chinese imports as part of his broader America First trade strategy. This policy mandates federal agencies to prioritize American economic interests, with tariffs serving as a tool to reduce the U.S. trade deficit and boost domestic manufacturing. According to the administration, such tariffs are essential for countering what it perceives as unfair trade practices and ensuring national security. In addition to tariffs, the U.S. has also imposed export controls on China, specifically restricting access to advanced semiconductor technology. These restrictions include limitations on the export of semiconductor manufacturing equipment and critical software tools used in chip production. The rationale behind these measures is to slow China's progress in areas such as artificial intelligence and high-tech industries, as U.S. policymakers fear that advancements in these fields could pose economic and security threats. However, despite these efforts, China recently unveiled a major technological breakthrough that has sent shockwaves through global financial markets. Instead of retaliating with countermeasures like tariffs, China has chosen to fight back through innovation, launching a product that has the potential to reshape the global technological landscape. Reports indicate that this cutting-edge artificial intelligence development has positioned China as a strong competitor to the United States in the high-tech sector. The unveiling of this new technology had an immediate impact on global markets, significantly affecting major US-based tech companies. Industry leaders such as OpenAI, Nvidia, Google, and Meta, formerly Facebook, saw their stock prices decline following the announcement, reflecting investor concerns about the shifting balance of technological power. President Trump responded to the emergence of China's AI platform, DeepSeek, by describing it as a wake-up call for American technology firms. He stressed the need for U.S. industries to focus on innovation in order to remain competitive in the global AI race. While the launch of DeepSeek caused substantial market turmoil, including a staggering $1 trillion loss in the total value of the leading U.S. tech index and a historic single-day loss of $600 billion for Nvidia, Trump also suggested that DeepSeek's cost-effective approach to AI development could present opportunities. He noted that achieving similar AI performance with fewer resources could help U.S. companies reduce expenses and improve efficiency. While the specific details of China's latest technological breakthrough remain undisclosed, experts suggest that this advancement represents a significant leap in AI capabilities. Many speculate that DeepSeek's innovation is focused on advanced fields such as generative AI, machine learning, or even quantum computing integration. The announcement has fueled discussions about the global AI competition, highlighting the intensifying race for technological dominance between the world's two largest economies. The impact of these developments was felt strongly on January 27, 2025, when the U.S. financial markets experienced a sharp and historic downturn. The announcement of DeepSeek's advanced AI model triggered widespread uncertainty, leading to a major sell-off in the tech sector and forcing a reassessment of America's position in the global AI race. The Nasdaq Composite, which is heavily composed of technology companies, suffered a dramatic 3.1% decline, marking its most significant single-day drop in over a month. Meanwhile, the S&P 500 fell by 1.5%, with the tech sector being the primary driver of losses. The Dow Jones Industrial Average, however, managed to rise by 0.7%, as gains in healthcare and consumer stocks helped offset the heavy losses in the technology sector. The most profound impact was seen among major technology companies, particularly Nvidia. As one of the leading semiconductor and AI firms, Nvidia saw its stock price plunge by nearly 17%, wiping out approximately $465 billion in market capitalization, marking the largest single-day loss in U.S. stock market history. Other tech giants, including Microsoft and Alphabet, Google's parent company, also experienced significant declines, each falling by approximately 4%. Investors were deeply concerned about how these companies would adapt to the rising competition from emerging Chinese tech firms. The market panic was driven by DeepSeek's revelation of an AI model that reportedly matches or even surpasses the capabilities of leading US AI models, such as those developed by OpenAI. However, what set DeepSeek apart was not just its performance but also its efficiency and cost-effectiveness. Unlike US companies, which rely heavily on advanced hardware such as Nvidia's high-performance GPUs, DeepSeek achieved comparable results using less sophisticated and more affordable technology. This revelation raised questions about the sustainability of the high-cost development strategies employed by American tech firms, prompting widespread sell-offs and a re-evaluation of their long-term growth potential. DeepSeek, a Chinese company founded in 2023 by entrepreneurs Liang Wenfeng and Hangzhou, has rapidly gained international recognition for its AI advancements. The company specializes in developing powerful yet cost-efficient AI models, with its latest creation, R1, drawing widespread attention for its remarkable capabilities. R1 is capable of understanding and generating human language with precision, rivaling models like OpenAI's GPT. Additionally, it can process and interpret visual data, such as images and videos, making it highly useful for applications in autonomous vehicles, security systems, and content moderation. One of R1's most impressive features is its cost efficiency. Unlike major US tech firms, which invest heavily in cutting-edge hardware, DeepSeek developed R1 using more accessible, less advanced technology, significantly lowering costs while maintaining extraordinary performance. DeepSeek's founder, Liang Wenfeng, has a strong background in engineering and previously co-founded a company that used AI for investment strategies. This earlier success provided the funding necessary to launch DeepSeek, with Liang's vision centered on making cutting-edge AI both accessible and affordable. In a bold move, DeepSeek made R1 completely open source, allowing anyone worldwide to use, modify, or build upon it for free. This strategy directly contrasts with the traditional approach of US tech giants, which often keep their AI models private and proprietary. The open-source nature of R1 has fueled even greater disruption in the tech industry, leading to major financial losses for US firms, with Nvidia alone experiencing a $600 billion drop in valuation. DeepSeek's rapid ascent has sparked debates about the evolving global AI landscape and the effectiveness of US policies aimed at curbing China's technological advancements. Despite efforts to limit China's access to advanced semiconductors, DeepSeek's success demonstrates that innovation can thrive even under restrictive conditions. Chinese researchers have overcome technological constraints by optimizing AI algorithms to function efficiently on less powerful hardware, bypassing reliance on high-end chips. Additionally, China has heavily invested in education and research, cultivating a highly skilled AI workforce. Many of these experts, having studied abroad, have returned to China, contributing to the country's advancements in AI. The US has long sought to limit China's technological progress through sanctions, export controls, and trade barriers. However, DeepSeek's success has exposed flaws in this approach. Rather than stifling innovation, these restrictions have pushed China to accelerate its domestic technological capabilities, reducing dependence on foreign technology. DeepSeek's emergence highlights the limitations of US industrial policy, which has relied on protectionist measures rather than fostering greater investment in research, education, and infrastructure. As a result, American tech firms are now facing unprecedented competition from a relatively small Chinese startup that achieved major breakthroughs with a modest $6.5 million investment. The fallout from DeepSeek's rise underscores the need for a more adaptive approach to economic competition. If the US continues to focus solely on containment strategies rather than fostering its own innovation, it risks falling behind in the global AI race. The current administration now faces a critical moment. It can either view this disruption as a threat or an opportunity to reimagine its technological strategy and secure long-term competitiveness in the global economy.